Hey, what's up everyone? It's Cincy, your go-to Forex trader, bringing you all the good vibes. Today, I'm going to walk you through how I use technical indicators to analyze and predict potential stock movements, including whether earnings for a particular stock will swing significantly up or down. I will also show you how I gauge potential market volatility using the VIX. As you probably know, NVIDIA has been one of the hottest stocks lately. They just released their earnings today, and as of the pre-market, the stock is actually down a whopping 9%. Before the earnings announcement, I mentioned to my close friends that based on my chart analysis, NVIDIA was unlikely to move up this time around, just like the last earnings report. Now, with NVIDIA taking a big hit in pre-market, it is most likely impacting the Nasdaq and broader market futures. This sets the stage for what could be a volatile trading day tomorrow, and it might just be the perfect opportunity for the bears to push the market lower. Now let's dive into the chart and break down what my algorithm is actually telling us concerning this. It's Cincy and welcome to the chart. So today I'm going to be showing you how I use technical indicators to pretty much predict what I think the potential movement of a stock would be prior to the earnings call. So as a lot of you know, NVIDIA is one of the hottest stocks in the market currently, and their earnings actually happen to be today after the market. And for me, I did my chart analysis, and before the earnings call, I told my friends, I was like, listen, I don't think this earnings result is going to be the same as the last one. I mean, what do I mean? I'm not saying NVIDIA is going to report a loss or something like that with respect to financials, but I was just letting them know that the technical analysis seems to be different from the last one, because the last earnings, the report came out and the stock actually did very well. But I don't think that would be the same in this case. I feel like the market was not going to be as receptive as the last time. So again, let's just go to the charts and I'll show you how I was able to use my analysis to differentiate between the two, and also how I use my technical analysis to also pick out when I think a potential volatility is about to hit the market. So for those of you who don't know, volatility is not necessarily it's a good thing because it creates an opportunity for people to buy, but it also creates a lot of fear where people start offloading their shares and everything. So so again, before I start talking too much, let me just show you how I use my technical analysis to differentiate between earnings calls and also to predict potential volatility that could hit the market. So what's good, people? Welcome to the charts. And so today I'm going to be showing you guys how I use technical analysis to kind of determine if I want to get into an earnings play or not. So for me, I'm strictly technical analysis kind of guy. I know a lot of people use fundamentals, and fundamentals is always going to be greater than technicals. But at the end of the day, if you've been using something for some time, and you can actually now start using it to kind of predict what you think the potential trend of a particular instrument would be. So for example, NVIDIA is going to be releasing their earnings, NVIDIA released their earnings after the market today, and you can see it went down, I think, as low as 9% at some point. And before the earnings actually started, I told my friends, I was like, listen, I don't think NVIDIA's earnings, how the market is going to respond, not the report itself, but how the market is going to respond might not necessarily be the same as the last report, because of what I'm seeing on the technical analysis of things. And this is why I don't know, kind of bothers me a bit. So I was going to sit back the market and just kind of watch and see how things go. And like I said, the market at some point it was down 9%, and the Nasdaq futures was also down over 100 points. So let's go to the charts real quick and let me show you what I'm talking about exactly. So for those of you who have been following me for some time, I use two things when it comes to looking at my technical analysis. And on the chart here is the daily chart of the NVIDIA. So NVIDIA is one of the top companies in the US, and I use technical analysis on the chart with things like you can see I have a B sign and a green arrow. In this case, that means buy signal, and you can see the most current signal is actually the red arrow and a red signal and a red sign, which means sell. So which means this was telling me prior to the earnings that this was going to be a sell, which means the price was going to be dropping. So I was like, that is interesting. So and the EES stands for earnings, right? So another thing I did not like before the earnings was that NVIDIA's price was also dropping below the baseline. So you can see there's a baseline right here, this green line and the white line. So whenever it's a buy, the baseline becomes a green, and whenever it's a sell, the baseline becomes a white line. But now you also know that whenever it's a buy, we want our price to always be above the baseline, and whenever we're selling, we want the price to always be below the baseline. So the minute the price goes below this baseline, it's also validating this idea that this is actually going to be a sell. So that also scares me a little bit. Now I'm just going to go back in time so that way you can see how this compares to the last earnings. So again, this is the E sign earnings, and this was also on a Wednesday, 22nd of May 2024, right? And you can see NVIDIA earnings before earnings had a B sign, and as a matter of fact had the price above the baseline, and also had the price above the Ichimoku cloud as well. So these were more of a bullish sign as compared to what we're seeing in this current earnings. So that was why I was a little bit skeptical. So after I look at my primary indicators, the next thing I want to look at are the secondary ones. So if I was to zoom out a bit, and below the chart you see the secondary indicators. So the first indicator you see here is the average true range, or the ATR. So if you guys watch my other videos, you will see how I explained how I use the ATR for my entry. So I'm not going to be talking about that in this video, so please do check out that last video. So now moving on to the next indicator is my zero line or my one line cross. Now before I move on, you can see that this line here is just going to mark my entry date, this blue line for this earnings, and if I go a little bit in time, this green line is going to mark my earnings for the previous NVIDIA. So we're going to be comparing both technical analysis right now. So the first one is my zero line. So my zero line cross, if I was to zoom in, the first thing you see is a zero line, which is this white line. So the zero line is the white line, and the green line is the signal line. So the only thing you need to know here is that whenever the signal line is above the zero line, then that is a buy or a bullish signal, and whenever the signal line is below the white line or the zero line, then that is more of a sell signal. So you can see as of the time when NVIDIA closed yesterday, what we see was that the signal line was in fact below the zero line. So like I was saying, so at the time when NVIDIA closed yesterday, the signal line was actually below the zero line. So this was telling me that this is more of a bearish or sell signal. So now we just don't want to use one, we want to use multiple indicators just to kind of justify if this is actually a reasonable confirmation. So you can see the next one is my two-line cross. So my two-line cross is comparing my fast line, which is the green line, and a slow line. So whenever the green line is above the red line, then that is more of a buy, but whenever the red line is above the green line, then that is more of a sell. So you can see as of the time when NVIDIA closed, there was a little crossover right there. So it's almost like you can see the red line starts to cross above the green line. So that is also telling me this is the beginning of a potential bearish signal. Again, we've made this confirmation. Again, now I'm being even more skeptical. Now let's look at one more indicator. Now this indicator, the way this works is you see this red arrow and pointing down, that is telling me there's a bearish signal along with these red bars. If it was bullish, I'll be getting more of these light green transparent bars. So again, because I'm getting this red color, this is also telling me this is a potential bearish play. So again, now I've gotten 3 confirmations on the secondary and about 3 confirmations on the primary as well. So that is enough confirmation for me to know that this might not necessarily be the earnings play to enter. But if I was to go back in time and compare what happens, you can see that this one on the 0 line cross, on that day, the signal line was actually above the 0 line. So that's good, right? That is telling me that is a bullish or buy signal, right? The 2 line cross, you can see the 2 line cross, the green was above the red, so that is a buy or a bullish signal as well. So that's good. And also this particular algorithm or indicator tool was also giving me this green transparent bars, so I like that. So that is also a good sign. And as a matter of fact, this signal as well was also having the signal line above its 0 line. So you can see there is a midway line, there's a lower boundary, and there's an upper boundary. So whenever this signal line falls between the mid and the upper boundary, that is more of a bullish signal. And if the signal line is between the 0 line and the lower boundary, then that's more of a bearish signal or sell signal. So you can see that is also a good confirmation that this was good. And also my final indicator, you can see the green line was also above the red line for my second 2 line cross indicator. So this is a lot of bullish story. So I would have been a better gambler of these earnings. So if you see what the price did on this particular earnings, it went from the close of the day, which was what, 94, and it went as high as 106 the next day and closed at 103. And you can see the next 3 days it went as high as 11.15, and this was actually before NVIDIA did the split. So I know, I'm sure at the time the price was actually way higher than this, for those of you who have been following NVIDIA. So you can see this is just how I can just use, you know, simple indicator analysis like this, just to kind of like predict what earnings is worth looking at or not. So again, if I was to look at the VIX, the VIX is also one of the things I also want to look at, because you know, we know the VIX is what we use to gauge fear in the market. So you can see the VIX is something that it's very, very useful for me. Prior to the what's it called, the carry trade, I saw something in the VIX which I also alerted my friends. I was like, hey, listen, the VIX is doing something very, very strange. I'm getting some buy signals, and not only that, I'm seeing some confirmation on my secondary charts that are telling me this could not be a good time to be in the market. And you know, if the VIX goes up, then obviously fear increases, and you know, people start to offload their shares and the market starts to drop. And you know how that goes, it's just crazy cataclysm, like my friend says. Right, so if you look at the signal, sorry, before I do that, let me just quickly mark that date so we know where we're at. So let's just tag it real quick. I'm just going to tag this tag this day right there. Let's tag it. Tag this day right. So let's look at the yellow line, right? So you can see on this day, if I was to go, you can see we do have the signal line was actually above the white line, so that was a buy signal. You can also see that my 2 line cross, the green line was above the red, so that was also a very strong signal right there. And you can also see this was also a green bar, so that was strong. And the funny thing was the signal for this was also strong, right? And the last one was this. You can see that the green line also went above the red line. So we got like a lot of confirmation here that the VIX is actually about to go up. And this actually spiked the, you know, all the way to what, 60s. And this created that, you know, huge drop that we saw in the market. But now the market is also, you know, currently making its way back up again. But, you know, you can use, you know, things like this to your advantage to, you know, maybe buy puts or whatever the case might be, just to make money in the market. And you can see, in fact, the current signal that we're seeing in the market is actually a buy signal. So we don't know, maybe there's another downtrend or fear coming, you know, in the next future or so. But hey, you guys be careful. And so that's it. So there you have it, right on my chart. You can see how I use these easy to interpret indicators to predict the potential outcomes of earning calls and spot any looming market volatility using the VIX. As always, stay cautious, especially with the Fed's cutting rates and the upcoming elections in November. I can guarantee you the market is going to be a banger. You can bet the market volatility will be there. So stick to your plan and trade safely. Once again, it's your boy Sensei, and let's make some small money together, even if it's just a little.